speaking, recent changes made to the land, land acquisition or compensation procedure. Because if we say changes made to the act, there should be amendments passed by the parliament to amend the act. No such amendments have been brought forward so far, but by regulations, the procedure has been changed. You must keep that also in mind legally. Because if we say recent changes to the Land Acquisition Act, there should be some amendments passed by the Parliament, amendment acts, but no such amendment acts passed by the Parliament, but regulation they have passed, Parliament has passed the regulation. Those presented by the minister. So the procedure of assessment of compensation change by recent developments. That is how you have to get the idea. And if we summarize what we learned so far, up to about 2001, the whole procedure in Land Acquisition Act number 9 of 1950 we followed to assess compensation when the private land is acquired. Then they introduced the lock system for particular projects approved by the cabinet. So lock system was effective for the projects approved by the cabinet up to 2008. 1st September 2008. That is how it developed. As students, of course, when you are learning this, the important things you have to learn is there are certain legal procedures introduced during that period. One such thing is the Rent Amendment Act number 26 of 2002. That was effective from 24th of October 2002. Then acquisition, when the Section 7 gazetted after that date, we have to apply that amendment to the properties which are under protected tenancy under the Rent Act. Right? Thereby, you take that into your mind. We can apply the demolition node and that procedure we follow. We'll be learning them in time to come. The tenancy is not recognized still by that act. Only the landlord, he can pay higher amount than based on authorized rent. Up to 24th of October 2002, we had to follow the authorized rent basis and assess the compensation if a land with the protected tenant is acquired by the government. Keep that in mind. Another legislation that is fragmentation law number 20 of 2005, which was effective from 22nd May 2005. Up to that date, coconut lands even more than 10 acres could have subdivided and sold in the market. And by that, you can get realized a high value than the agricultural value. If there's demand, that is how it happened. But If the same land is acquired, the relevant date is after 22nd of July 2022, 2005, what will happen is, by the fragmentation law, that was restricted to subdivide coconut lands over 10 acres, 4 hectares. See the difference there. If a 15-acre land acquired before 22nd July 2005, if there's demand for residential purpose, we can subdivide that land and sell in the open market and get realized a higher amount. But same land, if the 15-acre land, coconut land acquired, the relevant date is after 22nd May 2005, we can't subdivide land and sell in the open market because of the restrictions imposed by the fragmentation law. In such an event, we have to go by the agricultural value of that coconut land. Those are the subtle differences you have to keep in mind. Okay. Second era, then the third era is National Policy for Payment of Compensation. NPPC. That was effective only for a short period from 1st September 2008 to 13th March 2009. Because National Policy of Payment of Compensation incorporated everything which was there in LAC system, and that was made effective to all the acquisitions under Land Acquisition Act. That's the difference. But still, the MPPC did not become a part of the law. Therefore, they introduced everything in MPPC incorporated in Regulation 2008 and get that passed in the Parliament. So that is effective for the entire acquisitions under Land Acquisition Act and made it law under Land Acquisition Act. Mind you, still that has to be passed in the Parliament in the as an amendment only, that becomes a part of the Land Acquisition Act. Still, regulations are there, but we implement regulations. Keep that in mind. Now, we are discussing on regulation now. This is the slide from which we have to go forward. I explained to you there are three components in the compensation assessment: market value, severance and injurious affection, plus disturbance. What you have to keep in mind is first two components, market value and severance and injurious affections, are based on the market value of the property acquired. Right? But disturbance part is not based on the market value. It is based on value to owner basis. Market value, then value to owner. Keep that in mind. Okay. Now market value. What does regulations say? Regulation 1 under 1.1. In the case of land where a part of land is acquired and when its value as a separate entity deems to realize a value proportionately lower than the market value of the mainland, the compensation should be proportionate to the value of the mainland. I think I explained the situation, especially when strips of land are acquired. If we consider as separate entity under the definition under section 45(1) market value definition, nobody will purchase 10 feet wide a strip in the open market by paying a higher amount because that land is not buildable. Only for agricultural purpose you can use it. Right? Therefore, under this regulation 1.1, if a part of the land is acquired then under separate entity principle, if the value of that land does not reflect the real market value when taken that land in the mainland, then the regulation says determine the market compensation according to the value of the mainland, the remaining portion. Simply, before acquisition, with that mainland, if the value is 200,000 per perch, we can adopt same value for the strip acquired. Right? One thing you have to keep in mind, this is called additional compensation. First, we assess the real compensation based on separate entity principle. Then we assess the land as a part of the mainland, and the extra amount is paid as additional compensation. Just look at the explanatory notes. The physical condition, extent, the highest and best use of the mainland, legally permissible market value, and any encumbrances, etc., should be considered in ascertaining of value. I explained to you how legal encumbrances are created. If a land is encumbered by some legally encumbered, then we have to take that value as part of the value of the mainland. Okay. And I am not going to explain what is highest and best use since you already know. Look at the example. It's a 10-point block. It's a 20-point block, 18-point block, 15-point block, 45-point block. Then the punt strip is acquired. Generally, it says, irrespective of size of the mainland, determine the site value of a buildable front block and adopt the same rate for acquired portion. As valuation students, you know, when the extent differs, price per perch also differs. You can't expect the rate per perch for 10 perch land and adopt the same rate for 45 perch land. Right? If 10 perch land is 200,000, sometimes 45 larger land value may be 150,000. But to be fair, it says determine the site value of a buildable front block and adopt the same rate for acquired portion. If the buildable land, if we take the buildable normal size is 10 perch, the perch value of 10 perch block is 500,000. It says you adopt the same rate for all the front blocks acquired without considering the size. Okay. Then 1.2 market value, restatement value. Where the date of intention to acquire was published, the building is used for occupation and or business purposes, or is intended to be used for occupation and or business purposes. The difference between the cost of reconstruction and the value of building based for determination of market value under section 1.1 should be paid as an additional compensation. What does it say? We have two methods generally to assess market value. We use contractor's basis or investment basis. Contractor's basis means we take land and building components separately. We adopt the rate for the land based on the market sales evidence and find the value for the land. For the building, what we do is, depending on the condition of the construction, we adopt a rate per square foot based on the current prices prevailing in the market. Say we use 8,000 per square foot. Then for the age, we made some deduction. Depreciation. We multiply the floor area by 8,000 and multiply by 0.75 to 25%, deduct the SAD. Depreciation. Then the rate comes to 6,000. 6,000 into the floor area. To that amount, we add the land price. Then arrive at the market value. It means generally, in short, land value plus depreciated replacement cost of the building added together to arrive at the market value. What this regulation 1.2 says, in such an event, you have to pay the restatement cost and the depreciated cost, DRC value and GRC, gross replacement cost, and out of that we find DRC, depreciated replacement cost. The difference in between those two, we have to pay as additional compensation. Sorry. Additional compensation. It's okay. Contractor's basis is very easy for you to calculate because GRC value is there, DRC value is there. The difference in between we pay them as additional component. If the property is valued based on investment basis, how do you do that? In such an event, what we do is we have to calculate the land value first based on the market evidence and deduct that amount from the market value calculated based on investment basis, and you get the balance. The balance is for the building. And again, you know, based on the depreciation, based on the age of the building, age and condition, we allow some depreciation. If we could determine the percentage that could have deducted for that particular building, take that amount as, then the balance sheet take as the depreciated replacement cost of the building. Say 10% deducted based on the condition of the building, then we multiply or divide the DRC value by 0.9, then we get the GRC of the building. And out of that, the amount, when we deduct the amount we found by taking away land value, is paid as additional compensation. I think you get the idea. Now, abandoned buildings, structures, some explanatory notes are there. Those are very important. A building will qualify for payment of any additional value based on cost of reinstatement if and only if it has not been abandoned. How to determine whether the building is abandoned or not? Buildings, structures under construction. No payment based on restatement cost should be paid for incomplete buildings, structures which reasonably appear to have been abandoned. How do you determine? Generally, buildings under construction are acquired. How do we determine whether they are abandoned or not? To do that, in this case, it may be advisable to look into approved building plan, etc. For any building under construction, there should be a approved building plan. If the approved building plan is available, generally they give validity period 1 year. If it's past 1 year, because of the acquisition, they might have stopped. You have to look into that and inquire into that and then determine that is the building is not abandoned. Because this principle, or the explanatory notes are made. You know, this Southern Highway, that was the first acquisition we had for this expressway, construction of expressway, Southern Expressway. There were certain buildings in some areas, the ancestral houses, parents are dead and gone, children are living in Colombo cities. They don't go and occupy the buildings, but they don't demolish them because that was their parental house. For such buildings, without any occupation, just abandoned houses, we do not pay any restatement cost. Only market value is paid depending on the condition. Encroachments. In the case of encroachment on state lands, with the concurrence of the Judicial Secretary in writing, restatement value may be paid. You know, under section 53 of State Land Ordinance and also under section 101, as I can remember, of Land Development Ordinance, no compensation is paid for encroachers for any improvements done in state lands. Specifically, that is mentioned. But to be fair, if such properties are acquired, no need to acquire because state lands normally no need to acquire. But anyway, within the acquisitions, if we find that encroaches are there in those lands, for the improvements done by them, the division secretary or the acquiring officer, no, the division secretary can determine whether to pay compensation for that particular occupiers or encroaches. That's on government lands. Encroaches on private land where the owner has not contested the encumbrances in a court of law, the person carried out the improvements will qualify to receive the value upon adequate proof of that improvements have been made by such person. Private lands are there. There may be encroachers. If the owner of that particular land does not object, then compensation can be paid for the improvements done by that private individual or the encroacher on private lands too. So just look at this, the two different scenarios. Mark could tell you 1.3. Value based on development potential could be considered for paddy lands acquired where permission to fill such lands have been granted by the Agrarian Service Commissioner. When the paddy land is acquired, if the Agrarian Commission General has issued a permit to fill up that particular portion of that paddy land, we can consider residential or commercial value for that particular land depending on the approval given. But rarely you come across such situations. Explanatory note says copies of formal approval for filling should be obtained and the valuation should be based with regard to conditions pertaining to permitted use, extent, etc. Okay. Generally, for commercial or residential purpose, permission will be given for 10 purchases in rural areas, it means Pradesh Sabha areas, and 6 purchases in urban areas, that is municipal councils and urban councils, 6 purchases. That's the upper limit. Now, we have already learned the planning permission. Planning permission already granted. Under that, we can consider the filling permit issued by the Agrarian Commissioner. The same time, we learned that we can consider assumed planning permission. To be fair, as you know, when acquisition is going on, it's very difficult for you to get the filling permission. If you have already taken, of course, before the acquisition, all right. But when the acquisition procedure started, the Agrarian Service Commission General will not issue filling permissions because they know that particular land will be acquired. To be fair, what we can do is we can consider that under assumed planning permission. It's not that easy. There are certain conditions to be fulfilled to get the film permission. There's a circular issued by the Ministry of Agriculture in 2005. So in such an event, if we are considering the assumed planning permission, we have to look at the conditions or the procedure given in that particular circular and see whether we could get the film permission as required by this section. Then we can pay compensation based on assumed planning permission. Okay. Don't worry. I am separately discussing about the film permission of paddy lands in a different lecture. Then you can get a clear idea. Fourth one, market value. When an acquired building is occupied by a tenant, statutory tenant, protected under the provisions of the Rent Act number 7.1972, as amended thereafter, the compensation should be ascertained in proportion having regard to the provision of Rent Amendment Act number 26 of 2002. I little touch this the last lecture. Until 17 March 2009, tenants are not entitled for compensation under Land Acquisition Act. That is specifically mentioned in section 65 interpretations. But by regulation 2008, the statutory tenants under Rent Act were recognized as parties entitled for compensation. In such an event, if a tenanted property with a protected tenant under the Rent Act is acquired after 17 March 2009, the owner as well as the tenant both are entitled for compensation. And the procedure I'll be discussing with you in time to come, how to assess compensation. Explanatory notes. Unencumbered period interest should be calculated. There's a four-step process there to assessment of compensation. First, we calculate the unencumbered freehold interest, market value of unencumbered freehold interest without considering the tenant is there, based on the present condition of the building. Then the statutory entitlement of the landlord and tenant under Amendment Act number 26 of 2002 should be calculated. Then we calculate the market value of encumbered freehold interest. Then we calculate the market value of protected tenant. Fourth stage, unencumbered value should be apportioned between tenant and the landlord accordingly. Section 46(1) says compensation should be proportionate to the interest. Therefore, When the 10-1 edition is given by the acquiring officer, he has to recognize the owner and the protected tenant as parties entitled for compensation. Then we have to apportion the compensation accordingly. This procedure will be discussed in time to come. Okay. Is there? I think this example is little premature. I think I'll explain this in the next presentation when we discuss the rent act. See, then you can easily understand what it says. Other than who have done BSS state management, of course, they know this, the procedure, but others are there. So I'll explain this example also when we are discussing rent act. So under the original Land Acquisition Act, we consider the acquired land as a separate entity and assess market value. By the regulation 2008, there are 4 different ways of assessing market value. And you must learn what the differences are. What are the differences? Okay. Market value 1.1, 1.2, 1.3, and 1.4. We learn 4 ways of assessing market value under regulation 2008. Then the second part, injurious affection and severance. By the original act, injurious affection and severance is limited to 20% of the market value. I need not to explain to you since it's very clear. Because of the separate entity principle, when a part of the land acquired is only injurious affection and severance arises, if I say it again, the injurious affection and severance arises only when a part of land is acquired. Because of the separate entity principle, the acquired part we have to value as a separate entity. What will happen is, as a separate entity, the market value is a very, very small amount. So injurious affection also and severance also we are limited to 20% of that small amount. So you can imagine they get a very small amount because of if we really apply this procedure given in the Land Acquisition Act. Therefore, by the regulation 2008, damage caused by any severance and injurious affection should be allowed fully. Not that we are taking 20% of the market value, but we have to assess the actual damage to the remaining land when a part of the land is acquired, severance or injurious affection. Actual injury should be calculated in each and every case. If you can remember, I mentioned that in such event, we apply before and after method of valuation to find out the injury to the balance land. Right? Keep that in mind. To calculate injurious effects and severance, we apply before and after method of valuation. Okay. We'll be doing some examples in time to come. Then the disturbances and other payments. There's a test for determining eligibility for claim for disturbance compensation. The test is A. The loss must be shown to have been sustained. Part of the building is acquired. Definitely, balance part is injuriously affected. The loss must be the natural and reasonable consequence of the dispossession. Right? That should be because of the acquisition, not because of any other reason. The loss must be too remote, must not be too remote. I think I have made this example when I was discussing this topic earlier also, because it's a good real world example. A lady in Kotalavala, when the land is acquired for Outer Colombo Circle Road, part of is a land acquired for the Outer Colombo Circle Road Expressway, and she claimed compensation for the injurious affection. How she calculated that? She said she bought that land to construct a house for his brother in order to get him married. If you have a house, then you can have a girl with a big dowry, right? Then the lady said, now part of the land is acquired, balance land lost its real value. Therefore, she claimed compensation for that sort of injurious affection. I don't know how to calculate. The loss must be quantifiable. Yeah. The loss that can happen to his brother's dowry, we can't quantify. Okay. The loss must be mitigated. Owner has to take necessary action to minimize the damage. Generally, mitigation comes in a case like insurance valuation. Generally, if a damage is caused by a burst pipe, first of all, you have to stop flowing through the pipe and then take action. There's a really real situation in insurance valuation. So, first he apply the test to the case and then assess compensation for disturbance. These are the heads covered by that. Expenses incurred for appearing for Section 9 inquiry. Generally, to attend Section 9 inquiry, before that you have to retain a valuer, get the advice of a valuer to prepare the claim. Then you have to collect documents from land registry. Then you have to, sometimes you have to retain a lawyer. For all those things, you have to spend money. You can recover them under these expenses incurred for appearing for Section 9 inquiry. You can recover them as disturbance. 3.2 expenses for finding alternative accommodation. If your house is acquired or business premises is acquired, you have to find alternate accommodation. For that, you may have to put advertisements or find brokers, get the advice of brokers, so until like that. For those things, you can claim. Cost incurred in change of residence, shifting. Then business premises, cost of advertising. Business premises and industries, refixing cost of fixtures and fittings. Then expenses incurred for transport. Loss of earnings from business, of course, this in our act, loss of earnings is already there. 3.8 increased overhead expenses. This happening transition period, you have to stay here and make the place to be shifted. Maybe you have to do some renovations or even fixing of parts in the business premises like that. For that, then you have to maintain two places. So the so-called overhead expenses double. Double payments, rents, rates, etc. All are the expenses to own due to the acquisition. 3.11. Any other additional expenses for disturbance or compensation not considered under any other section of this Act, which is directly not connected to market value of the land. So, if anything is not covered by 1 to 10, 3.1 to 3.10, you can consider that in additional anything consider that 3.11, because if you can remember, we learned 16 such items. 16 such items. So there may not be all included in the disturbance in our regulation 2008. Anything you can interpret under 3.11. 3.12. When an owner of a house or of an industrial property displaced, additional 10% payment based on market value that was paid even in large system. Generally, after publication of Section 38A also, the acquiring authority determine a specific date for them to vacate the premises. If the premises are vacated on the date given by the acquiring officer, so generally they pay 10% extra for residential and business premises. Now explanatory notes are given there. I have explained already. 3.2 expenses for finding alternative accommodation. This is the normal large system they paid. These expenses should be paid with regard to the nature of the house occupied. Rates based on present lot are as below. Maximum rental 10,000 municipal councils, 7,500 urban councils, 5,000 per month for. These are the rates determined in 2001. To get an idea only, we have put these figures. So with the present condition, rates may be increased. 10,000 in 2001. Today, of course, maybe 75,000 or 100,000, I don't know. Similarly, cost incurred, change of residence, shifting. Generally, that was based on the floor area of the house. For shifting, paid like that. Then cost of advertising, formal business 2,500, formal 15,000, informal 2,500. Likewise, they paid cost of advertising. Then remixing of cost and fittings, those were the rates adopted in large system. Loss of earnings from business, generally under Land Acquisition Act, we recognized formal businesses only where they maintain their statement of accounts and audited accounts, things like that. But for informal business also, 15,000 rupees paid in under large system. Increased overhead expenses should be recounted as per the circumstances. Double payment should be recommended as per the circumstances. If they claim, based on the claim, we can pay. 10. All other expenses to the owner due to the acquisition. The loss sustained because of the a compulsory sale of the business due to the acquisition. Example, sale of stock, furniture and fittings as per the circumstances. I explain these when we learn the principles of payment of compensation. Generally, for sale value of stock, we paid as compensation. Cost and FSC post sale value, the difference between two paid as compensation. Furniture and fittings also, the cost and DRC value. FSC, DRC value and FSC, for sale value and DRC value, the between two, the difference paid as compensation. Then old and disabled people, that was considered. Self-employment also considered. If it is possible to calculate, the expense should be calculated unless a maximum of 15% for all heads were paid. Now, all these are changed depending on the time. 311, as I said, disturbance for tenants should be assessed under the above heads. Nothing is given there. Under 311, even to tenants, you can pay compensation, disturbance compensation to tenants. Just very important. Just look at this. Generally, tenants are not entitled for compensation under Section 65 other than statutory tenants under Rent Act. Therefore, under disturbance, you can consider the tenants also under Section 311. If tenants are making any claims, they are entitled for disturbance compensation under Regulation 2008. Keep that in mind. 312, I explained, additional 10% payment can be made for a residential property when the possession is given at the relevant date. For let on or lease properties when the valuation is based on the investment method. Right. So those are the two conditions there. Right. That's the end of this presentation. What I wanted to emphasize was the different eras of changing payment of compensation. I already explained at the very beginning. Under the Land Acquisition Act, the provisions given in Act to the letter we followed after 2001. That's the first era. Second era, 2001 to 2008, September 1st or August 31st. That's the era of payment of compensation on the LARC system, LARC LARC system, or the projects approved by the cabinet. So second era, there are certain legal changes also, as I mentioned earlier. The Rent Amendment Act number 26 of 2002 and the effect of that to payment of compensation. Right? What you have to keep in mind is, under the amendment, the landlord or the owner is entitled to calculate the compensation on open market value rather than authorized rent. Before 2001, generally under Land Acquisition Act, you have to follow the authorized rent basis and assess the market value. Then again, I mentioned about the fragmentation law. Before 22nd May of 2005, even coconut lands over 10 acres, we could have considered as they are subdivided and sold in the open market. But after that date, we have to consider them as coconut lands if the land extent of the land is over 10 acres. Then 1st September 2008, National Policy of Payment of Compensation introduced, but it didn't last for a long time. Only after 6 months, generally nothing happened. I think we were not able to apply NPPC for any acquisitions during that period. But 2009, 17 March, Regulation 2008 introduced, covering all the lapses, most of the lapses in the Land Acquisition Act, to pay fair and reasonable compensation to the owners. Okay. Now we learn them, right? And learning theory is not important, but the most important thing is application them in real assessment of compensation. That, of course, I wish to do some examples for you to understand how to apply them in real situations. Okay. Now I am going to stop this presentation there. One thing I must tell you here, recently an act to abolish rent act was presented in the parliament. Bill was presented to the parliament, but still it has not been passed in the parliament. If they pass that in the parliament, according to the bill, the provisions in the Rent Act number 7 of 1972 as amended by Act number 55 of 1980 and 26 of 2002 will come to an end. In short, the rent acts will be abolished. Anyhow, there are so many criticisms about that bill, and we'll see what is happening. Anyway, until such time, it's better for us to know about the Rent Act number 7 of 1972. And since it is very important in our valuation process or assessment of compensation when private lands are acquired. Generally, the Rent Act stipulates to recover only the authorized rent or standard rent from a tenant. Charging more open market rent value or more rent from a tenant other than authorized rent or standard rent is prohibited, illegal. Also, a tenant can pay only the authorized rent or standard rent for premises if that particular premises is coming within the purview of the Rent Act. Okay. Therefore, we must know what are the tenanted properties coming within the Rent Act and what are the properties which are exempted from the Rent Act. That's very important for us to know. Now we'll go through this and see the procedure we have to follow if a property is tenanted. Authorized rent or standard rent is a legal rent which has a legal definition. It is defined by the Rent Act number 7 of 1972 as amended by the Rent Amendment Act number 55 of 1980. An authorized rent can be determined and recovered only from residential and commercial premises within the following limitations given in the Act. 4 limitations are given. They are by area, by property, for premises given on rent, and that rent determined by the rent board. Those are the 4 limitations. Rent can be determined only by the rent board. Authorized rent and standard rent can be determined only for the business or residential properties given on rent. And also can be determined only for the properties not accepted. And also to determine rent that should be within the area declared under the Rent Act. Now we'll see what they are. Sorry. Authorized rent of residential or business premises can be determined only of the premises situated within an area declared under Section 2 of the Rent Act. Rent Act, Section 2 of the Rent Act says, area where Rent Restriction Act number 29 of 1948 was in force, it's a declared area, and area declared by the minister by a notification published in the Gazette under Section 2. Those are the 2 instances where the Rent Act applies. So, area declared under Restriction Act number 29 1948 was in force, and area declared by the minister by notification published in the Gazette are coming within the purview of the Rent Act. What's the importance of that? If we are determining the authorized standard rent, first we have to get satisfied that the Rent Act applies to that particular area. To check that, these are the instances. Okay. Under Section 2(4) of the Rent Act, the provision of the Act apply to premises other than commercial premises where landlord is a local authority. Local authority supermarkets and other commercial stalls are not coming within the Rent Act. Any premises where the landlord is the National Housing Commissioner, because those days National Housing Commissioner owns some apartment buildings or flats in Colombo, Maligagatha flats, then the Bambalapidi flats likewise, old days in Torrington flats, those are all flats owned by National Housing Department. Then later on they were transferred to National Housing Development Authority. But those premises are not coming within the Rent Act. Then certain premises are exempted. To determine that, commercial properties where annual value as at 1/1/1968, or if it first assessed after that date, the first annual value exceeds relevant amount as below. The professional valuers who have already done BSc estate management and practicing as valuers must carefully understand this, because even in the practical world, still we find valuers are not that particular about determining the exemption of properties from Rent Act. One thing, all residential properties except which are exempted from the Act are coming within the rent act. But commercial premises, where the annual value as 119068 exceeds the relevant amount, they are exempted. The relevant amounts are Colombo Municipal Council 6,000, other municipal councils 4,000, urban councils 2,000, town councils and other area except above 1, 2, and 3. It means nowadays Pradesh Sabha 1,000. Right. If the annual value as at 1168 or first assessed after that date, if the annual value does not exceed these limits, they are coming within the purview of the Rent Act. 6,000 Colombo, 4,000 other MCs, 2,000 urban councils, 1,000 Pradesh Sabhas. 4. Where it is a commercial property situated outside of the above municipal council, urban council, and town council as at the date of commencement of the act. I think it's no need for me to explain what is town council, because until 1987, we had 4 types of local authorities in this country: municipal council, urban council, town council, and village councils. By the Act number 15 of 1987, town councils and these village councils amalgamated and formed Pradesh Sabhas. Keep that also in mind. If the property is given as at the date of commencement of the act for a rent higher than 1,500 per annum, if a property is not given on rent as at the date of commencement of the act and subsequently given on rent higher than 1,500 per annum, however, on an application made by the tenant, if the rent act is satisfied, rent board is satisfied that the reasonable rent of the premises does not exceed 1,500 per annum, such premises can be declared as an unaccepted premises. 1,500 divided by 12 mean 125. Monthly rent 125. What is it for nowadays, right? Because there were certain properties not assessed for rating purpose. Because in town council, urban council, town council, municipal council, all the properties were assessed for rating purpose. But in village councils, only properties within built-up areas were assessed for rating. Unless you assess them for rating purpose, you don't get an annual value. This is called for such properties. If the rent is 1,500 and above 1,500, those are exempted. And also, if the rent board thinks the annual rent exceeds 1,500, then also those properties we consider commercial properties as exempted. You will question whether the rent board has the ability to do assess rental value like that. How do they have it? Because rent board is A rent board comprises of 5 members. One member is the representative of the chief value, government chief value. He is the person who is assessing rental value or even annual value or standard rent under the Rent Act. Representative of the chief value. Okay. Then commercial properties, we go by the annual value as at 1968, or if assessed after that date, the first assessment, if the first assessment exceeds the relevant amount, those properties are exempted, not coming within the purview of the Rent Act. Residential premises constructed after January 1, 1980 and let on know after that date. If the building had been constructed after 1/1/1980, then such buildings are exempted. Rent board does not apply. What's the criterion? How to determine? Sometimes you may have the approved building plan or else a CFC. Certificate of conformity is the best evidence for that. If CFC is not available, the building application, approved building application. If it is, that is also not there, then you can get a certificate through the Gram Seva Niladhari or even the Pradesh Sabha. Okay. Then residential premises occupied by the owner on January 1, 1980 and let on know after that date. The burden of proof is on the tenant. He has to prove that the property was not occupied by the owner as at 1/1/80 and then with the proof only they can come before the board of rent board. Otherwise, unoccupied properties as at 1/1/1980 are exempted from Rent Act. Thirdly, residential premises purchased by the owner on January 1, 1990 and let on know after that date, not purchased really, possessed. Maybe possession taken on litigation. To get the tenant ejected, there might have been a case filed in the courts and he got the possession after that date, 1/1/1980, and given on rent after getting the possession. Those are exempted. Now, there are two types of properties. One is commercial premises, other one residential. Commercial premises are exempted based on the annual value as at 1/1/1968. Colombo Municipal Council is 6,000, other municipal councils 4,000, urban councils 2,000, Pradesh Sabhas 1,000. If the annual value exceeds those limits, those are exempted from the Rent Act. Residential premises constructed after 1/1/1980 and given on rent exempted. On occupying as at 1/1/1980 and given on rent after that exempted. Possession taken after 1/1/1980 and given on rent exempted. This, of course, the law is there, but sir, if you really look at this, it's really, you feel it ridiculous, really. Residential property is in the occupation of a person who had been issued with a valid visa under the Immigration and Immigrants Act. Property is occupied by foreigners whose total income exceed 1,000 per month those days in 1972, or non-resident company in respect of which the landlord obtains the prior approval of CNH, Commission of National Housing, who shall grant approval if he is satisfied that the previous tenant has vacated voluntarily or upon an order of courts. So those, of course, for the sake of law, it's there, but no validity. Anyway, other than the commercial premises and the residential premises which are exempted, this is very important. Any premises of which the landlord is a cooperative society registered under the Cooperative Societies Law number 5 of 1972 or any other law, the state, a public corporation, a public authority or company registered under the Companies Act number 17 of 1982. If the landlord is the cooperative society or any company, corporation, state or even authorities. Or any premises of which the tenant is a cooperative society. Premises of which the tenant is a cooperative society registered under the Cooperative Societies Act number 5 of 1972 or any other law, the state, a public corporation, a public authority or company registered under the Companies Act number 17 of 92 are under the regulation published in the extraordinary gazette number. Now, if the property tenant is a cooperative society or any company or authority, exempted from rent act does not apply. If the landlord is the cooperative society or any authority or public corporation or a company, rent act does not apply. Okay. Now, those are the exempted premises under the Rent Act. Other than those exempted, all other residential properties and commercial properties are coming within the purview of the Rent Act. So that is how you have to determine. Then a premises should be let and not exempted in order to come within the purview provisions of the Rent Act. So there should be a landlord and tenant relationship between the owner or his agent and the occupier. Burden of proof of tenancy lies on the tenant, and there should be a contract of tenancy. Right? Now, ladies and gentlemen, I'm taking 10 minutes break. Yasim, I am going to stop there for 10 minutes. We'll meet after 10 minutes, say 7:50. Okay? Hello?
Okay, sir.
Okay, right. Shall we start now? Hello.
We'll start, sir.
Okay, okay. Now, our premises should be let and not exempted in order to come within the provision of the Rent Act. It means there should be a landlord and also a tenant relationship. Before the rent board, under the provisions of the Rent Act, rent boards are established. There are so many boards within the country in declared areas by the minister, comprising 5 members, including a representative from the government chief value. Any dispute or determination of rent or repairs or anything like that which are coming within the purview of the Rent Act, you have to go for the rent board. And through that only you can get any concessions given in the Rent Act. For that you have to prove landlord and tenant relationship. The burden of proof of tenancy before the board, once a case is filed before the board, generally landlord and tenant both are summoned. Then the landlord has to accept the applicant as the tenant. Also, the applicant has to accept landlord as the owner. Burden of proof of tenancy lies on the tenant. So he has to prove that he is occupying the premises on a contract or on the consent of the landlord or anything like that. And the same thing, the landlord has to accept him as the tenant. Generally, it says there should be a contract of contract of tenancy. A contract of tenancy is an agreement whereby one party agrees to give the use of immovable property on a rent to another for successive period until it is terminated by the notice given by either party. The person who agrees to give the use of the immovable property is known as the landlord, and the person who promises to pay the rent for the use of the immovable property is the tenant. In this instance, there are certain decided cases by courts. It has been held by the Supreme Court that when a lease in respect of premises came to an end, the lessee became a statutory tenant. What is this? If a tenancy agreement is there, if a person occupies premises, business or residential, they come to an agreement with the landlord. The written agreement should be registered with the rent board under section 29 of the Rent Act. Right? If it is registered only rent act, only it get the real benefits. In Gunaratna versus Telenis 47 NLR 43 under section 29(2), since the agreement has not registered with the rent board, the Supreme Court decided after the expiration of the lease period, the lessee becomes statutory tenant if he is not leaving the property. Right? It's a very, very important legal provision. If a person is coming into occupy a house as a tenant, there should be an agreement, written agreement. That agreement should be registered with the rent board under section 29(2). If it does not register, if not registered, what will happen is after the lease term, if the tenant does not vacate the premises, he can continue in the same premises as a statutory tenant under the provisions of the Rent Act. Same thing determined in Mrs. D. Karunaratna versus Mrs. N.S. Fernando, 73 NLR 458 also. And acceptance of rent by itself does not establish a contract of tenancy. It's very important. A person occupies a property and a notice is given. He does not vacate and instead he pays rent. Landlord accepts the rent also. But acceptance of rent after notice does not itself operate to renew the contract of tenancy if there is no evidence shown consensus ad idem. Latin term consensus ad idem means consent given by the landlord to continue the tenancy by the tenant. That was proved by Swami Sivananda versus the Bishop of Kandy 55 NLR 13. In this case, when a prospective purchaser of certain premises is permitted, pending his purchase to occupy the premises on demand of a stipulated sum of money, his occupation is at best that of licensee and not that of a contractual tenant entitled to claim the protection of the Rent Restriction Act. In this case, what happened was Shivananda agreed to purchase a property owned by Bishop of Kandy. With the agreement, he came into occupation of a house. And he did not purchase the property. Instead, he continues in tenancy there. After the over of the agreement period also, then the court decided no, he is not a protected tenant, he is only a licensee. Right? I just pointed out those two cases to prove that there should be an agreement of tenancy to be a protected tenant under the Rent Act. Authorized rent can be legally determined only by the rent board appointed under section 39 of the jurisdiction in which the residential or commercial property is situated. To determine the authorized rent, generally, the normal procedure what happens is a tenant come into occupation agreeing with some rent, and when the time goes on, he feels that the rental demand is high. Therefore, he make an application to the rent board to get the authorized rent determined. Then the procedure which before board is, then the landlord is summoned for an inquiry. At that inquiry, landlord has to accept the tenancy. Also, tenant has to accept the owner as the landlord. Then only they can proceed with the inquiry. Then at the inquiry, he has to prove that they have an agreement of tenancy. If the tenancy agreement proved, only the rent board can take a decision. And the authorized rent or standard rent should be determined by the rent board. The authority to determine rent, authorized rent is the rent board. Generally, the chief valuer's representative is there, so he is the person who is calculating the authorized rent or the standard rent. Because generally, all valuers are acquainted with the provisions of the Rent Act. Determination of authorized rent. A rent which can be recovered from the property, not accepted, and situated within an area where the Rent Act is in operation is the authorized rent. The authorized rent comprises of the standard rent determined under Section 4 and the permitted increases under Section 5. So first of all, we have to decide what the standard rent is. The standard rent of any residential premises where post assessment of annual value made on or before 1169 and does not exceed the relevant amount, and of any business premises the annual value of which does not exceed the relevant amount, means annual value as at January 1955, or if the annual value was assessed after that month, such annual value plus if the rates paid by the landlord, the rates payable for the time being. The annual value as at 1955 plus rates as at today make the standard rent. Right. Get this again. The standard rent of any residential premises where post assessment of annual value made on or before 1169. What does it mean? I explained to you all residential properties, if not exempted, are coming within the purview of the Rent Act. Now here it says annual value made on or before 11,969 and does not exceed the relevant amount. Because there's authorized standard rent and receivable rent, right? Receivable rent is quite different from authorized rent, but you should know how to calculate them. We are now talking on authorized rent and we see that. Now the relevant amount for residential premises is municipal council is 4,000, Colombo Municipal Council 4,000, other municipal council 2,000, urban councils 1,000, and Pradesh Sabhas 5,000, 500. Those are the relevant amount. If the relevant amount does not exceed, this is the formula you have to use to calculate authorized rent for residential premises as well as for commercial. In fact, this amendment, this amendment or this calculation is brought by the Amendment Act number 55 of 1980, not in the original Act number 7 of 1972. Simple. You have to take the 1955 annual value or the annual value assessed after that date, that annual value plus current rates make the standard rent of the premises. Standard rent of any residential premises other than above. I said receivable rent under the Rent Act number 7 of 1972. If the annual value as at 1/1/1969 exceeds the relevant amount, 4,000, 2,000, 1,000, and 500, for such properties, the formula is this, only for residential premises. Current annual value as at today, plus current rates. Both together make the standard rent. See the difference. In the case of any premises to which the above provisions do not apply, the standard rent of such premises means such rent as may be fixed by the board on an application made either by the landlord or by the tenant. What are the premises where above provisions do not apply? Again, the premises located in unassessed areas of Pradesh Sabha. For such premises, the rent board has to determine the standard rent. As I mentioned earlier, the representative of the government chief fellow is there, for he is the person who is doing it for the rent board. The authorized rent is the combination of standard rent plus permitted increases. Therefore, we must have knowledge about permitted increases. According to section 5, permitted increases are as below. Since determination of standard rent, where the landlord incurred or incurs expenditure on the improvements, repairs, or structural alterations, if prior consent of the tenant for the work as well as for the amount, or prior approval of the board has been obtained, the standard rent per annum may be increased for a period of 5 years by 25% each year of the amount of the expenditures so incurred. permitted increases are depending on the improvements, repairs, and structural alterations done to the property. To take that into consideration, the authorized rent and the standard rent should be already determined earlier. First, you have to determine the standard rent. Then, after determination of all standard rent, if improvements, repairs, or structural alterations are done, just by the landlord can't do that. He had to get the consent of the tenant for the work as well as the amount. If with the prior consent of the tenant for the work as well as for the amount, then only you can add that amount to the authorized standard rent and determine the authorized rent by the rent board. If the consent of the tenant has not obtained, in such an event, if the consent of the board, rent board has been already obtained, either consent of the tenant or consent of the board. Consent of the board means generally landlord and tenant both are participating in inquiries. Therefore, with the consent of both parties, the rent board determine the amount as well as the improvements, repairs, and structural alterations required. In such event, first already standard and determined, then the cost of repair, improvements, and alterations is determined, then that can be recovered within a period of 5 years of 25% of the cost each year. It means the landlord can recover 25% more of the cost from the tenant. If he spent 100 rupees for repairs, 25,000, 25, 25, 25, 25. Likewise, 5 years they can recover. It means 125 he can recover. Those are the permitted increases. These are the relevant amount for residential premises. I said Kalam Municipal Council 2,000. Sorry, I said Bhutan 2,000. Other municipal council 1,500. Urban councils 1,000. Town councils or any other area other than above 500. Sorry, I said 4,000 as 2,000. Other municipal councils 1,500. Urban councils 1,000 and Pradesh Sabhas 500. Those are the relevant amount for residential premises as at 1/1/1969. Take those 2 dates also into your head to determine whether a commercial property is coming within the rent board is to determine based on the annual value as at 1/1/1968. Then to apply the formula to assess the standard rent for residential premises, you have to apply the annual value as at 1/1/1969. Okay. If the relevant amount exceeds 2,000 for Kalam Municipal Council, 1,500 other municipal council, 1,000 for urban council, and 500 rupees Pradesh Avas, in such an event, you have to calculate authorization, you have to take current annual value plus current rates. If the amount does not exceed those amounts, you have to take 1955 annual value plus current rates. Okay. So the authorized rent under original Act 1972 provisions generally Section 6 of the Amendment Act number 55 of 1980 says the rent that can be recovered should be higher rent that is calculated under 1972 Act or under 1941 55. Therefore, to determine which is the rent to be recovered, you have to calculate rent under both acts. Both means 1972 Act as well as Amendment number 55 or 1980. Both this you have to calculate. So, authorized rent calculation for residential premises and business premises, Section 4.1, line number 7 of 1972. If the annual value as at 1,190,68 if first assessed after that date, annual value of such assessment does not exceed the relevant amount with respect to residential or business premises, annual value as at 1/11/1941 or first assessment after that date, that annual value plus annual rates on such assessment. Just look at this. What will be the authorized rent if the property is constructed in 1940s, right? Annual value as at 1/11/1941 plus annual rates on such assessment is the standard rent is that. To that, permitted increases mean 10% of the standard rent plus 6% of approved cost of improvements plus excess rates. It means difference between today's rates and rates at that time. That portion you have to add. All those three things are added, are coming within permitted increases. Then when you add that to permitted increases to rent, standard rent, you get the authorized rent assessed. Final determination of authorized rent. Under Section 6, the authorized rent of any premises shall not be less than the authorized rent or the receivable rent of those premises, as the case may be under the provisions of this Act as so in force on March 1, 1972. So, to determine the rent that can be recovered, you have to calculate the rent on the formula given in 1972 Act and also on the formula given in Amendment Act number 55 of 1980. Both these you have to calculate authorized rent or standard rent and see whichever is the higher. Then the higher one is charged under Section 6 of the Rent Act. Now, I was talking on the second era of assessment of compensation, the period after 2001 up to 2008. Between those 2 years, the Rent Amendment Act number 26 of 2002 introduced. Under which the provisions for obtaining vacant possession or To get the tenants ejected, the new amendments were introduced. What's the use of that to the assessment of compensation? When we are assessing the market value of a tenanted property protected under Rent Act, if the relevant date is after 24th October 2002, then we have to see whether we can get the vacant possession of that particular property under the provisions of the Act number 26 of 2002. If we can get the vacant possession under the regulations, under the law, under the provisions, in such an event, the proportionate amount can be paid to the owner. Under section 46(1), right? Therefore, obtaining vacant possession, we have to study. When a property is occupied by a protected tenant under the Rent Act, it will affect to the market value of the property adversely, as only a legal rent can be recovered from such properties. I already stated, if a property is occupied by a protected tenant under the Rent Act, the compensation we have to assess based on the authorized rent or the standard rent, which is a bare minimum amount. I'll give you a good example. A property along Marine Drive, Kolpiti, acquired for the Marine Drive Road in the year 2000. Yes, around date was in 2001. A house covering about nearly 4,000 square feet and the land about 20 purchased land occupied by a protected tenant, and the compensation assessed under Land Acquisition Act was 380,000 rupees. Whereas for unencumbered property, a purchase value adopted was 600,000 rupees, 6 lakhs per purchase. Except the building, the land itself could have valued at 12 million as 600,000 rupees per purchase. But because of the effect of Rent Act, we assessed the market value at 380,000 rupees. Because there's CL 944 case determined by the Land Acquisition Board of Review, they accepted the assessment of market value on authorized rent for properties with protected tenants. Based on that, the valuation department assessed that amount. The owner went to Land Acquisition Board of Review before he taking the case to hearing. he complained it to the Bribery and Corruption Commission. So the Bribery and Corruption Commission filed a case under the Act against the Chief Value and 5 others, the Inspector, District Valuer, Regional Valuer, Deputy Chief Valuer and Chief Valuer, all case against them that was there for about 10 years in courts and ultimately determined by the court, no, you can't deviate from authorized rent and the valuation was correct. So therefore, it's very important for you to learn this procedure in the Land Acquisition Act, no, the Rent Act. According to the Rent Act, there are only 2 ways by which the vacant possession can be obtained. One is obtaining a demolition order. Two is ejection of tenant. Section 18A. Demolition of buildings over 40 years old. Commission of National Housing may authorize the owner to demolish buildings over 40 years old subject to following conditions. Order the owner to provide alternative accommodation to the tenant or to pay 2 years rent as an advance to find alternate accommodation by the tenant, or order the owner to pay to the tenant 10 years annual value of the premises as at the date of application for demolition, or 20% of the market value of the premises as determined by the chief valuer, or to pay rupees 150,000, whichever is higher. Before this, under 1972 Act, even number 50 or 1980, it was very difficult to get the vacant position because building should be over 50 years old and alternate accommodation should be supplied by the National Housing Commissioner. It's very difficult because National Housing Commissioner did not have any stock of houses to give like that. Therefore, taking vacant position was very difficult. But after introduction of Section 18A under Amendment Act number 20 of 2002, the owner can pay compensation to the tenant and get the vacant position if the building is over 40 years old. This is that. Or else, there are proceedings for ejection of tenant under Section 22. When the standard rent does not exceed 1,100 rupees per month, ejectment case can be filed in courts on following grounds. The rent is in arrears for 3 months or more after it has become due. Second, such premises are reasonably required for occupation as a residence for the landlord or any member of the family, or for the purpose of the trade, business, profession, occasion, or employment of the landlord. For this purpose, prior to filing action in courts, a sum equivalent to 10 years rent or rupees 150,000, whichever is higher, should be deposited with Commission of National Housing and inform the Commission of National Housing about the institution of such case. Just a decided case for the two about the reasonable requirement. The reasonable requirement should be proved by burden of proof is on the landlord. In the case of Kuttaji versus Kanapati Chetty, 57 NLR 306, it was held that premises cannot be required for employees of the business unless there's some compulsion of law or some necessity or ordinary usage in the business of the type concerned, before it can be said that the purpose of providing accommodation for employees constitute a reasonable requirement for the purpose of the business. If neither the plaintiff nor the defendant prove their allegations, judgment cannot be entered in favor of the plaintiff without examining the question which the premises were reasonable required by the plaintiff, having regard to the situation of the defendant as well, as determined in Maruf versus Isadine 48 in LR 14. In the case of J.M. Apwami versus P.B. De Silva, 67 NLR 490, the plaintiff, who was a government servant, due to retire by the 28/9/1962, instituted an action on 19 to 1963 against his tenant, the defendant, for ejectment on the ground that the rented premises were reasonably required for his occupation as a residence. This was allowed although the plaintiff was occupying a government quarters at the time of institution of action, because after retirement he needs a place to occupy. Reasonable, the reasonable requirement. Third, in case of service tenants, when their service is terminated for convicted for using the premises for illegal or immoral purpose, or become guilty of conduct through courts which is a nuisance to the adjoining occupants. In this nuisance, of course, in the case of Thamodaram Pillai versus Govindasamy 47 in 197, it was held that a tenant of one room in a house occupied by the landlord can be ejected if he causes a substantial interference with the ejectment of the landlord, who was occupying an adjoining room. In this case, the tenant was a radio mechanic, created noises and trouble while repairing radio sets till late at night. Nuisance. Landlord is occupying one room of the building and the front room given for a radio mechanic to do his business, and he was repairing the radios till late night and making noises. So landlord filed a case against him for the noise nuisance, and that was proved in and court accepted. This is the very good case you have to keep in mind. Pereira and Sons versus Mrs. E. Pate, 59 NLR 334. P.S. Pereira and Sons. Baker was a tenant and one of the rooms was used by workers as restroom. The occupants of the room used to urinate in and pollute the drain on both sides of the road outside that room. Neighboring occupier who lived opposite the premises repeatedly complained about the objectionable behavior of the occupants, but the defendant permitted to nuisance to continue. It was held that defendant was guilty of conduct which was a nuisance to adjoining occupiers and was therefore liable to be ejected from the premises. Nuisance. Urinating in the drain. In the case of Mallika Pillai versus Amadu Parikkar 53 NLR 161, front portion let while occupying the rear portion. entire premises was served with one bath and lavatory. Defendant permitted the large number of outsiders to make use of bath and lavatory and thus greatly inconvenienced the members of the landlord. So, nuisance was proved and ejectment given. Immoral law, illegal purpose. Sunil Nami versus S.T. Vijaysekhar 16 LR 575. Son of the tenant was convicted of an offence under the betting on horse racing ordinance. It was held that the said conviction amounted to a use of the premises for an illegal purpose. Action failed due to the plaintiff was unable to prove that the tenant or his son actually reside in the said premises. Asia Umma versus Kachi Moideen, 61 NLR 330. Tenant was convicted of unlawful possession of cocaine. Action failed. Ju Abraham Singh versus R. Aridas. Dr. Justice C.G. Veermantri held that an illegal sale of arak in contravention of excise ordinance is a use of the premises for an illegal purpose. He further stated that sale of arak on a single occasion was sufficient because the tenant had taken advantage of the premises for the purpose of committing the offence. In Asilin Nona versus Don William, 75 NL 136, same was rejected as there was no evidence to prove that the tenant had taken advantage of the permission or of the premises for the purpose of committing the offense. So those cases were given for you to understand easily how difficult to get that tenant ejected from a premises, because then what we have to take into consideration, if a demolition order could be taken, that's the easiest way of getting a tenant vacant portion of the premises. And when we assess compensation, that's the solution we have, and we have to look into the problem and then try to see how we can use this demolition order section 18A and determine the market value of the acquired property if a tenant is occupying if the property is occupied by a protected tenant. And the fifth one, structural alterations done without prior authorization in writing of the landlord and the relevant local authority. You can't do structural alterations to a building without the consent of the landlord. The tenant can't do that, or even he has to get the approval of the local authority. Then six, change of use partly or wholly. Property is given for residential purpose, tenant is using for commercial purpose. It's a cost for ejectment. 7. Premises is required for development and sum equivalent to 10 years annual value or 20% of the market value as determined by chief value or 150,000, whichever is higher, is deposited with CNH for payment to the tenant as compensation. Now, this is the provision under demolition order also considered. Now, these under these provisions, this section, the courses, 7 courses, you can get the tenant ejected if the annual value, no, the standard rent is less than 100 rupees. When the standard rent exceeds 100 rupees per month, ejectment cases can be filed on above ground except that the rent is in arrears for 1 month. Generally, if the rent is in arrears for 3 months only, you can file an ejectment case if the standard rent is below 100 rupees. If the standard rent exceeds 100 rupees, you can file a case in courts on the ground that the rent is arrears in 1 month. One thing I must again emphasize, there's a bill presented to the parliament to abolish the Rent Act, but even though, as valuation students, you must study them and know what's the effect of rent laws in the country to the tenanted properties. Okay. Then succession, continuance of the tenancy upon the death of the tenant. Section 19. This also important when we are getting the vacant possession, how a death of a tenant affect the tenanted property. Under Section 19 of Rent Restriction Act number 29 of 1948, a notice had to be given within a specified period by the person who proposed to continue in occupation on the premises as a tenant. Succession, the occupied tenant should give a notice to the landlord that such and such person will succeed me after my tenancy. But Section 36, Rent Act number 709/72 says the person entitled to continue the tenancy on the death of a tenant are depending on the class of premises involved, more precisely defined. Not necessary for a person who proposes to continue the tenancy to give notice to the landlord to the effect. No need to give a notice to the landlord that such and such person will, so and so will continue the tenancy. The termination of the contract of tenancy of the tenant prior to his death does not entitle the person who are entitled to continue the tenancy upon the death of the tenant if at the time of his death he was in occupation of such premises. If some other person is occupying the premises with the dead person, he can continue as a tenancy under Section 36. Okay. Now we can go back to the example I said. Now I understand that you have a fair knowledge about the background of the Rent Act and how to get a demolition order and how it works and how to assess compensation is given in this example. 20 patch of land in commercial area with a residential building or 45 years old occupied by a tenant and is used as residential house. Residential building located in a commercial area. If the building is demolished, land can be used for commercial purpose. Floor area 1000 square feet. Rental value commercial purpose 25 per square foot to 40 per square foot. Residential 5 to 750 per square foot. Current annual value 3450. If without considering the encumbrance made by the protected tenant, if that property is in the open market for sale, a person will purchase that for commercial purpose rather than residential, because building is about 45 years old and generally tenanted properties are not maintained well. But if you sell that property for commercial purpose, since it is located in a commercial area, you can get a higher value. So I determined a perch value at 500,000 per perch, and 20 perches is worth 10 million. We ignore the building there because it's obsolete, and to get commercially realized, the building should be demolished since it's a residential building. Now, market value of unencumbered pre-owned interest comes to 10 million. To determine this, we forget about that the building is occupied by a tenant. Okay. Then, to get the tenant ejected, we have to pay compensation to the tenant. The Act says, Section 18A says, 20% of the market value assessed by the chief valuer, or 10 times of the annual value, or 150,000 rupees, whichever is higher, can pay as compensation to the tenant to get him ejected when the demolition node is to get the demolition node. Right? Now, annual value 60,000, annual income 50,000, 60, because the floor area is 1,000, 1,000. The residential rental value varies from 5 rupees to 750. We assume that the tenanted buildings are not properly maintained, and also it has come to the age is 45, old house. Therefore, I adopted 5 rupees per square foot. 5 into 100,000 means 5,000. 5,000 into 12 means 60,000 rupees. Then deducted 25% for outgoings, 15,000. Then the net income cost to 45,000. And YP I use 5% as the lowest we can use for residential properties. 100 over 5 means 20. When we multiply by the net income by 20 YP, we get the market value 900,000. Generally, this value is to be determined by the chief valuer. The normal way determining by the chief valuer is this. He will consider the building is obsolete, and the minimum rental value you can get that from that building, because tenanted buildings are not maintained properly. And also the age is about 45. Therefore, the minimum YP you can adopt. That's 5 is the minimum, that's 20 is YP. Therefore, market value is 900,000. Then cost of obtaining vacant possession under Section 18A is payment to a tenant 150,000, or 20% of the market value as determined by the chief valuer. The market value determined by chief valuer is 900,000. 20% out of that is 180,000, or 10 years annual value. That's annual value is 3,400. 15 to 10, 34,500. The highest amount out of these three is 180,000. But the Section 18A 25 Section 80A, subsection 2, subsection B, subsection 2 says the reasonable amount as determined by the CNH. It should not be less than above. Then the reasonable amount may be not this amount, but this is the lowest amount you can consider 180,000. Now we have to see what the reasonable amount. How do we assess the reasonable amount? Annual income 60,000. Normal, that's the amount used by the chief value also to calculate the market value. But as authorized rent, he pays about 3,000 rupees. That is not given in the given, but we assume that 3,000 is the authorized rent annual paid as the rent for the building. So the tenant is enjoying a rental benefit of 57,000 because of the protection given under the Rent Act. For a property worth 60,000 per year, he is paying only 3,000 because of the statutory protection. Therefore, he is getting a rental benefit of statutory tenancy 57,000. So we have to find the market value of the rental benefit. For that, I determined the balance lifespan of the building as 65 years. Now the age is 45, and I determined the balance period will be another 20 years he can use the building. So I limited the lifespan of the building 20 years, and at 5%, I wanted to find the YP. YP for at 5% for 20 years is 12.4622 according to Paris valuation table. So the value comes to 710,345. Market value of the rental benefit of statutory tenant. But the tenant cannot sell his tenancy in the open market. There are restrictions. He can't sell that. He can enjoy but not sell. That should be reflected in this calculation. Therefore, I determine to deduct about 25% for impact on marketability. You may decide 50%, some may decide 30%. That's my idea. I say 25% is sufficient. So the market value of rental benefit of statutory tenants comes to 533,000 rupees. Now, at the very beginning, I said, no, under regulation 2008, I said, 4-stage calculation you have to do. First, we have to find out the unencumbered freehold market value of unencumbered freehold interest. We found that as 10 million. Then we find the market value of the rental benefit of the protected tenant or the market value of the tenancy. We calculate that. Then we want to find the market value of encumbered freehold interest because his interest is encumbered by the protected tenant. The market value, unencumbered market value 10 million. The compensation you have to pay about 533,000 to the tenant based on market value of rental benefit as calculated. But to get the vacant position, he has to first make an application to the National Housing Commissioner and then go to courts to get a court order, demolition order. For that, you have to spend for litigation. I estimated about 75,000 rupees there. That may not be sufficient. 200,000, 300,000 maybe. So compensation for tenant 533,000, litigation cost 75,000. Altogether, he has to spend 608,000 to get the demolition order. Then the money he has to spend, when we deduct that from the market value, the balance comes to 9,392,000. But to realize this amount, it takes time. Making application to the Commissioner of National Housing and getting the value assessed by the chief valuer, and also filing a case and to determine by the courts. I estimated the period as 2 years and deferred at 10% for 2 years. The 10% is taken from the treasury bill rate, right? And 10% for 2 years is 0.8264. Then when multiplied, the market value of encumbered freehold interest come to 7,761,549. Now we have all four parts that we require to determine the compensation. The market value of unencumbered freehold interest, tenant's value, encumbered freehold interest value of encumbered freehold interest, and now we have to apportion accordingly. So freeholder share 7,761,549 plus 533, the tenant's compensation. Out of that, landlord is getting, owner is getting 7,761,549. Out of 10 million, he is getting 9,357,409. The balance is tenant share. Out of this amount, total amount, 533,000 is the tenant share. Out of 10 million, his share comes to 642,591. Okay. Generally, at the examination, you will be tested on rent act also. Therefore, you have to acquaint with all the provisions and also with the examples. And some more examples will be done in time to come. Until such time, I'm going to stop there. No, any questions? So, ladies and gentlemen, I'm going to stop. Okay.
Thank you, sir.
Okay. Have a good night. We'll meet, I think, not this Sunday. Sunday the next. That's on the 7th or so, no? Yeah. Morning and evening both sessions. 9 to 12 and 3 to 6. Okay. Have a good night.
Thank you, sir. Good night.
Yes, sir.